Good afternoon, everyone. Welcome to this session, and hope you had a good lunch and enough food already there with you. Now there is time for food for thought. And as they say, there is an ancient Chinese phrase, may we live in interesting times. So these are really very interesting times, not an understatement at all, that we are passing through so many things happening simultaneously, and one of those being the geopolitical situation is not as good as some of us would have liked it to be. And the other is that there are different factors which are operating, which are moving the markets up and down. So without wasting much time, I would take up one of the most important factors which has been bothering the industry at large about fleet renewal, because we have been seeing in the tanker market, in particular the oil tankers, not the gas tankers so much, there has not been so much of demolitions, scrappings, or new buildings which have been ordered, which generally happens. And there are several reasons for that, which I would like the fellow panelists to explain. Maybe we can start with John, not because you are farthest away from me, but nevertheless, you can make the opening remarks about how long can we delay this fleet renewals in oil tankers and why it is happening.
Well, I mean, it's both scrapping and ordering is an economic decision, right? You cannot force it. The owners are going to be the ones who decide whether they're going to order or scrap a ship. And I think as you look at the existing macro picture, I don't think for ordering you have the ideal environment today to place an order for an asset that's going to last 20 years in a very uncertain macro environment where oil demand seems to be very close to peaking, and I'm talking about crude tankers here, and a lot of unknowns about what how steep any decline could be in terms of oil demand, in the next 5 or 10 years. So I think it's the fact that you don't have order book tells you more about how people feel about the macro environment. Of course, there is the issue about returns and prices, but I think big picture, I don't believe that's the ideal environment where you want to be investing in an asset that lasts 20 years plus.
Yeah, so as you mentioned, it is an owner's decision, and it is a suitable environment which will matter, and most important factor being the oil demand. So being an owner's decision, which you mentioned, maybe Peter, as in charge of one of the largest pools as far as the product tankers are concerned, what have you to say about this fleet renewal or the delay of it?
Well, I think you got to say that over the last couple of quarters, we've seen quite an uptick in ordering. Not surprising in the sense that you've got a really, really old fleet on the water. Half the product tanker order book right now is made up of LR2s. And we know historically 60 to 70% of these ships actually make their way into dirty trades. Yes. So that essentially removes about 30% of the existing product tanker order book, which is already low. With an old fleet on the water. So I think there's plenty of reasons why it might make sense to make some orders despite record high prices.
And despite the high freight translates into an additional cash which can be utilized for making those orders. Isn't it? What do you feel, Kostas, as you have more than 75 tankers in your book? Do you think it's the right time to make those orders?
I think the main concern now is also the technology, because we cannot decide what will be the engine type. We have not decided if it's going to be a LNG dual fuel or ammonia or whatever. So apart from the price, which is quite high, for example, a VLCC conventional would be 130 million. You put the dual fuel premium under 15 million. So if you're going to invest 145 million to VLCC now, then you need to back it up with a long-time charter. But who is going to commit for 5 or 10 years? Let's say 35, 40,000, is the oil major there? I don't think so. So also because the market has peaked the last years, the problem is you place an order now, then you're going to have the vessel after 3 years. So how's going to be the market then? But you still have to pay the hefty price.
Yeah, Captain Anand, just as Costas has made this important point that we don't know which fuel will be used in future. You have a large fleet of small and medium gas carriers. Do you also feel on the same lines that the uncertainty over alternative fuels is one of the factors which is impeding investment into tankers?
The first thing is to coming back to this order book. We discussed with Peter, he's the expert on this, but there has been, I think the second-hand prices going high has driven a lot of big names into ordering this year. And the first 2 months especially saw a large order book. I think in the clean products itself, about 20%, which Peter explained. Coming to this alternate fuels, see, fundamentally, yes, if you consider a gas carrier, 25, 30 years of life, it's a costly proposition. And in our segment, we have a larger problem as in there is no clarity on what is available. So if you start with, just look at the infrastructure, the supply chain infrastructure. If you consider a voyage from, say, Korea all the way to Suez, you can bunker in Korea, you can bunker in Hong Kong, Singapore, Sri Lanka, Fujairah, Djibouti, Saudi, Suez. Which alternate fuel is available along this supply chain? So that's a big thing, and I think owners will also want to see where different countries are investing in that infrastructure. And within our segment, ammonia seems like an obvious choice, but there is no engine available, and the engine may be there by 26, maybe 27. Biofuels are, firstly, there is not enough alternate fuel available to replace our present consumption. So that itself makes the decision very difficult. And then if you consider we don't have ammonia engines, biofuels are limited. Carbon capture is kind of picking up in technology, but where do you discharge this? So I think the regulations are coming in, but I don't think we have clear options, viabilities available in front of us.
All right, thanks, Captain. So as Captain Anand has pointed out about the uncertain environment and the regulations, also bunkering issues, John, do you think that these are the factors which can be taken care of in the medium term, but then looking from the investment point of view, because you have been very active as far as the gas carriers are concerned, so what would be the way forward as far as both these issues are concerned? Number one, the order book, and number two, the uncertainty over alternative fuels.
Yeah, thank you, Samir. Very good afternoon to everyone. I think we are absolutely sitting at a very, very fascinating timing. As almost, to me, is like a historic crossroad. To say that one side that we say a lot of, certainly, order book already on the way. On the other hand, in reality words, we say that still, whatever the sectors, we find that lack of ships. So partially because of the disruptions from geopolitical reasons. The other side, as we discussed just now, touched the point, I think different from like single hull tankers being phased out by regulation conventions. So in today's market, we say that of course many choices, either you will use different alternative fuels. We call them, I think it's very absolutely correct as alternative fuels because we don't know the real conventional one, how long will last, maybe last another few decades. So that's why I think if we talk market to market, there's probably no necessity or no pressure to scrap any type of vessels. So take a container ship example. So we see last weeks that like 20, 25 years old, 4,000, 5,000 TEU ships been fixed 3 years, 5 years long. So the liner major is still jumping on them, paying massive numbers as well. So I think it's similar things we've seen in the tanker, depend on the volatility of the market. So that's why, I mean, on the other hand, technically, it's, as said, my panelist also mentioned, I think it's very difficult to judge which one will be the wise and correct one on the alternative solutions. So that's why from Erasmus side, we try to be more cautious, at the same time try to be developing different domains. So, but at the moment, we focus on relatively smaller size of ships, where we say that the impact by different fuel or consumption or environmental regulations will be less than the bigger vessels. That's
Thanks, John, for such a detailed description. As you mentioned, that there is no pressure, no reason, no necessity at all as far as the demolition is concerned. But we do see that there is a flexibility in an entirely different category, and that is what Costas, and after that maybe Peter can throw light upon, is that we see that there is a shift, that dirty tankers are turning into clean tankers in their quest for higher earning. This was something I was also discussing with Adam Kent of MSI Limited about what are the prospects for VLCCs turning LR4s or otherwise. So maybe Costas and then Peter can throw light on this.
We have discussed internally about this strategy. However, our two VLCCs that we have is a long time charter attached. But basically, our main concern is if you want to turn a DPP tanker to a CPP, as Peter knows, there is a time lag because, okay, after when you clean it, then you need maybe 2 or 3 CPP cargoes in order to be approved. So this doesn't happen in one week or 2 weeks. It might take 1.5 months. So basically, the projection you're gonna do after 1.5 months, maybe then the DPP market is equal or better than the CPP market that you were expecting. So then all the cleaning costs will be like a big burden for the owners. So we don't tend to clean from DPP to CPP. We have our CPP vessels and DPP vessels, and we trade like this. I don't know how Hafnia does it.
No, I mean, we go back and forth a bit on MRs and handies, but I think what you're talking about is more on the VEs and the Suezmaxes. But I think these will only ever be passing things, and I think we saw a lot of it in July and August. It's already tapering off because the delta in freight has been it's gone because clean rates came off because a lot of VL and Suezmax tonnage came into play. At the same time, crude starting to improve, as it always does this time of year. So, I don't think it's something we have to contend with from here on in.
So basically, it can be considered a temporary phenomenon.
Yeah, and I think also you got to say that the clean markets and the dirty markets don't work independently over time. So if there is a delta, you will see ships moving back and forth.
Market finding its own equilibrium. Yeah. John, do you think it is an issue based on which there can be a permanent consolidation in terms of a concept called LR3s or LR4s, which has not happened for a very, very long time? There was an effort that it should, but it didn't materialize. But now that we see more than 60 ships converting into clean, but then as Peter said, the delta getting narrowed. So is this something which can be an item of investment from the point of view of putting money on bigger clean ships?
I think it's right now it's purely a decision made for Middle East refineries to gain an advantage in terms of like moving product east. I mean, obviously they have to compete somehow, and economies of scale that these big ships are offering is basically the easiest way to do that. So once this phase, probably in the next 9 or 12 months is over, I think probably you have back to a steady market where you won't have these big ships anymore. Plus, obviously, eventually you need to have the market turning back to the historical averages where Vs are anymore, followed by Suezmax, Aframax, and so on. You cannot have this distortion forever. So I think it's two things. First of all, it is these Middle East refineries that have to gain market share from the Atlantic. And second, it has to be with the distortion that you have between product carriers and crude in the last few years. This is going to normalize.
Yeah, so it is all about historical averages and how long the distortion can be there. And these were some of the points on the oil tankers. But there is also an important factor. You have mentioned historical averages from the point of view of these dirty to clean switch. But coming to gas carriers, there are averages of prices, new build prices, which maybe John and Captain Anand can put light upon. There are gas carriers which used to be priced new build $75 million 3 years ago. Now they cost $130 million. There are LNG carriers which used to be in $150 million, now they are $265 million. So the amount of capital which has to be put in is huge, even from the point of view of large investors. Of course, there is backing up. Of course, there are construction costs involved, which have also gone up. How you think, how much is it sustainable that such a massive rise in prices? So maybe first you, John, and later Captain Anand can give views on this high capital costs.
Thank you. I try to cover Captain Dan. Yeah, thank you. I think the pricing rise on the new building on the gas vessels, as we both companies have a relatively smaller size domain on the fully pressurized type of gas carriers. They are coasters. The thing is that, in my eyes, part of the reason that how and why the price rises, of course, obviously, the main supplier of this kind of smaller size building capacities out of Japan mainly, because China not built that smaller size. They are building, of course, VLGC, large LNG powered vessels, but the smaller coasters are mainly from Japan. And Korea, almost none of them neither. So, well, in Japan, of course, the labor cost is surging. On the other hand, especially on the small gas carrier domain, it largely depends on the availability and the cost of the gas tanks. So the gas tank, as we know, that is just about 2 tank makers in Japan. So they are providing relatively very limited tanks in the next few years. That's why we say that very limited tonnage supplies and new building slots available. That the shipyards in Japan, they have the slots to build, but they don't have the gas tank availability to fit in same time. So that's part of the reason. I think that's why we are also very, very firmly looking into this domain, because we can say the next few years also, even though the new building price is really climbing up very largely, and then the delivery slot is now pushing back to 2028, 2029 now. But at least we say that is a market that we can say the supply is very limited.
Captain Anand, in addition to what he has mentioned, one more point later you can also answer, as he has said that the 4 or 5 years of waiting time. So in combination to high capital costs, waiting time during which you may have to pay 50% of the amount, of the total amount for which the ship is there. Is this something, how can this be addressed or taken care of?
I'll come to the first part. I mean, high asset prices are never a great thing, yeah, that we understand. But it's not the first time it's happened. But beyond what John said about the small segment, if you go up one level into, say, the MGCs, now you've had something like 25% growth on the order book, from 114 in 22 to 143 in 25, end of 25, 26. But if you look at it, it also coincides with the Russian ammonia being out, means 3 million tons more to ship on a longer distance. We see a substantial demand, almost, I mean, the forecast demand is about close to 30% from 25, 26, the increase for ammonia to be shipped on MGCs. So I think there is still a positive and then again, I think it will also come to such expensive ships will also come to how you allocate trade. And those regions will obviously have to pay a higher freight cost. That will be a part of the economics. Now, coming to the second thing about the lack of availability of space, I can see GCMD is in the audience, and one of the things that Sanjay from GCMD mentioned, which makes total sense, is that there is never going to be enough green molecule. It's not going to happen that we are using, say, 100 tons of VLSF for today, and tomorrow you'll have 100 tons of alternate fuel. So the first step starts with reducing your requirement, reducing the need for that green molecule, and that comes with operational efficiencies and some alternate technologies which are already there. So that's the first step. And then when you say that the yard slots may not be available, we have to look at what can be done with existing ships. It may be reduction in speed, maybe existing things like hull coating, maybe wind, maybe carbon capture. So it won't be that you won't have ships on the water because of this backlog. There will be some impact on the supply demand, but I think we will find enough measures for existing ships.
Also, one more point while you are mentioning about this lack of slots, do you also see that more gas carriers are being ordered of the larger size compared to the smaller size? Why is it so? And because there is additional demand expected for small and medium-sized gas carriers, considering the current market scenario which John had also described.
There's a very decent supply-demand balance in the small segment. And I think post-2020 is when we have started seeing some returns in this segment. So I don't see, and I think the low growth is helpful. I don't see it impacting. And the focus then has gone, there is in addition to the scrapping, there's a huge demand for MGCs going forward. That is reflected, and a lot of people have got onto that. And second-hand pricing obviously impacts the order book. The VLGCs, of course, is a substantial gain, but I'm not in that segment.
Yeah, you're right. Yes, as you mentioned that low growth is helpful, it's more of a boon rather than a bane. So returning to oil tankers, of course, I'm aware that the time is running out, but you would have noticed that we started slightly late. So maybe we can get a few additional minutes. And in the meantime, I would request Peter and Kostas to give us some information on how do you see the markets of spot charter versus time charters as a means of investment in tankers, because they move often at tandem, they sometimes at lag, but try to catch with each other. I know that Kostas, your company has almost all your ships on time charter, and Peter's is something where ships are put into what is called a pool. So both are ideally placed to give their view on this sector. Thank you.
Well, I think we were looking at an analysis looking back for the last 5 years, TC versus spot in the MR segment. And up until the crisis in Russia broke out, TC was probably the preferred means of employment. Now, 2.5 years down the road with strong markets, the scales have tipped in favor of spot. So I think it's, of course, it's a matter of risk appetite, but it's also, it quite well illustrates, okay, the difference. You may take some hits in the spot from time to time, but you're there for the day that things kick off. So I think it's a little bit like religion. You could go either way, but what makes you comfortable and what makes you sleep at night?
No, as a company, we're heavy skewed towards time charters. But first of all, we have to distinguish the conventional spot market comparing to the gray spot market. Okay, as a stock-listed company, we're not participating in the gray trading. But the thing is that lately the spot market has softened a bit on the tankers, on the crude section. But the problem is the time charter is still high because it's the opportunity cost. Because owners have to think about, should I time charter a vessel for 1 year or should I explore to sell it? So basically, the high asset price, the high second-hand prices keeps the time charter a bit high comparing to the spot market, which lately is a bit softened. It's also supported by all the geopolitical events, which I don't foresee the next 1-2 years to be better the situation. So this will be very helpful for the tanker owners.
Yeah, that's an important point, Kostas, that time charter rates are high, but that's an opportunity cost. So John, how do you look at it in terms of investment? If you were to put your money, would it be in pools? Now the freight market is high. The conventional wisdom is that pools come to the rescue during lower freight rate times, but time charter versus pools. And also a second question, second-hand ships versus new buildings, specifically for tankers. So how do you look at it from investment point of view?
Well, let me put it differently. I think in this panel, 5 years from now, Anand will be the happiest man here because all the demand is coming out in the oil markets is gas-driven, whether it's LPG, ethylene, LNG, that's where the growth is. So the rest of us here, we're facing kind of a battle in terms of how you position yourself in what could be either a flattish or declining oil demand market. That doesn't mean that there are going to be opportunities. It could be opportunities in the spot market because you can trade the ships during periods that are very favorable. We did have the last decade. The last decade, actually, the best years, which was 15 and 16 for tankers, were actually the worst years in terms of supply and demand. So it's not driven purely by lower demand or higher supply or the balance. It could be driven by the shape of the oil curve, how traders feel about it. So I think like the next 5 years will be very interesting trading-wise. So your question about time charge versus spot, I would go with the spot. But I think as you look like to the end of the decade, probably the LPG market is the one that has real growth, followed maybe by the large crude carriers, VLCCs.
Yeah, that's also the oil demand, the shape of the oil curve determining the demand for ships. That is something we have been seeing over the years. Lower oil prices, more demand for VLCCs for floating storage. High oil prices, curtailment, use of inventories. So we often see the negative correlation coming into the picture. And now, finally, before we end up the session, maybe all of us can also discuss something without which no such session is complete, and that is the alternative fuels point of view. That traditionally there have been three segments of investment. Maybe investors come into containers, dry bulk carriers, or oil tankers. But now we see a whole diverse range of carriers. There is an opportunity for investment. It could be carbon carriers to capture carbon, which is used in methanol. It could be carriers for alternative fuels. It could be even ships like bunker barges for alternative fuels. So regardless of which sector you are currently in, maybe all of our esteemed panelists can give 2 minutes each on where they think the future of investment is from the point of view of going forward. Despite the uncertainties, I know that uncertainty is the only certain thing at the moment. Still, 2 minutes each. Maybe we can start with Captain Anand, then we move 2 steps to his left, and then 2 steps to his right. Please.
Thank you. See, for us, where we are now, CO2 shipping is a very obvious transition because we kind of handle, same with the fleet that John has got, it's very adjacent. But this is not my company's view, this is my personal view that the pricing of these ships, the contract duration, and the freight or the hire on offer right now doesn't make this a great investment. I mean, if I just compare, I would go for MGZs any day to a CO2 carrier. At what it is today, that may change. And I think, especially with the existing fleet having limited options, carbon capture may be a big thing. And there is a lot of technology evolving in that segment. And that will then mean that you need ships to carry this around the place. So there is great potential as long as the balance on hire is better. The returns are not there as I see it.
Thank you, Captain. And John, what have you to say for the future of investment?
I would say, again, back to my perspective is that we will try to focus on still smaller size of ships.
Small is beautiful.
Segments. Small is beautiful, yeah. And I think, obviously, back to the earlier topics we talked about on the small gas vessels. So it's not only the shipyards willing to do small gas or not, but there is also the competition from chemical tankers, for example. So and other multi-purpose segments also giving a lot of competitions to build ships there. So the gas vessels, smaller vessels, as long as not mega Chinese yard building, I believe that the supply side will be very tight. So let alone any unexpected geopolitical events coming up, I do believe that the market will remain firm, and similar for other feeder-sized business, whatever they are, is bulkers or container liner business or gas tanker business. Maybe, hopefully, we'll be also part of the tanker business in the future. But again, we'll be focusing on smaller segments. Thank you.
So 2 smaller segments. Over to you, John. You can break the ice, break waves, and
I would find a ship that burns the least amount of fuel and is the most volatile segment.
most volatile. Okay. And Kostas, and then Peter.
No, as a company, we're very cautious about the future. Okay, the prices are very high at the moment, but maybe in 2030, we're going to look back and say 2025, the ships are cheap. So, but we are diversified energy movers. We go against our client needs. So we go hand with our clients, and we say, if they want to build something, we can build with a long-time charter attached. We discuss about the technology. But I believe that there are a lot of ships in the water. I don't think we should order more, not as a company generally in the shipping industry. And then we can use the second-hand market, and everybody benefits from this, instead of flooding the market with new ships.
A lot of ships on water. No, doesn't make sense to flood the market with new ships. Still, there is a need for fleet renewal, but the interest rates are high, cost of capital is high. So what are your 2 final words on this one?
Well, I think we would be quite happy if no one ordered further ships, but that's probably not a sustainable thing for our energy transportation needs regardless. But I think on these alternative fuel transportation needs, it's such an immature market that I think for the foreseeable future, it will be custom-built, tailor-made ships for the individual requirements. And I think that will be the name of the game for quite some time.
So custom-made, tailor-made ships, customized ideally for each segment. That is the final word from one of our panelists. Uncertainty will remain, but the way forward is to innovate. And as I'm reminded of one interesting incident in the early 60s, a gathering in the White House of all the Nobel Prize winners from the Eastern Hemisphere. And the President Kennedy's remarks were that this is the most brilliant gathering ever, except when Thomas Jefferson was dining alone. So we are not as brilliant as that. None of them is a Nobel Prize winner, but all of them are brilliant in their own segments, maybe small gas carriers, maybe investments in chemical tankers, pools, time charters. That is precisely the reason why these brilliant panelists are here in Marine Money Conference session. I thank all of them for their expertise, and I also thank all of them for patiently taking up all these questions. And lastly, I thank all of you in the audience that you patiently heard them. Thank you.